In the vast realm of financial forecasting, few voices resonate with the authority of Warren Buffett, the Oracle of Omaha. His unparalleled acumen in predicting economic trends has not only earned him a legendary status, but has also safeguarded countless investors from potential pitfalls. Today, we delve into one of his most alarming predictions yet, a prediction that paints a grim picture of our economic future, hinting at a crisis of unprecedented magnitude. As we navigate through this narrative, remember that Buffett's words have historically been prophetic. So when he speaks of a looming catastrophe, it's a clarion call for all to heed. Keep watching until the end of the video to see why Warren Buffett predicts a horrible economic crisis where everything will collapse. Trust me, you don't want to miss this. Time and again, Warren Buffett's foresight has proven to be eerily accurate. In the late 90s, he warned of the tech bubble, a prediction that materialized in the early 2000s, leaving many in financial ruin. His cautionary tales about the 2008 housing bubble became headlines when the market crashed, leading to a global recession. These aren't mere coincidences, but a testament to Buffett's deep understanding of market dynamics and human psychology. His ability to see beyond the immediate and recognize long-term patterns is unparalleled. Each time, skeptics have doubted, only to witness the unfolding of events just as he foretold. As we stand on the brink of another of his grim forecasts, it's worth reflecting on these past predictions. They serve as a stark reminder that when Buffett speaks, the world would do well to listen. The economic horizon, according to Buffett, is darkening with telltale signs of an impending storm. Global debt is skyrocketing, reaching levels that are unsustainable and hinting at a bubble that's waiting to burst. Inflation rates, often a barometer of economic health, are fluctuating unpredictably, causing unease among investors. Stock markets, while seemingly robust, show patterns reminiscent of past bubbles, with overvaluations becoming a common concern. Additionally, the widening gap between the rich and the poor, coupled with stagnant wage growth, is creating socio-economic tensions. These indicators, when viewed collectively, paint a concerning picture. Buffett's warnings are grounded in these very observations, and history has shown that such signs often precede significant economic downturns. As these red flags become more evident, it's crucial for individuals and institutions alike to brace for potential upheavals. Economies function much like a delicate set of dominoes, interconnected and precariously balanced. A disturbance in one sector can send shockwaves throughout the system. Consider a major bank faltering. It doesn't just impact its shareholders. It reverberates, affecting other financial institutions, diminishing consumer trust, and potentially leading to a liquidity crisis. Suddenly, businesses can't secure loans, stalling growth. Consumers, sensing instability, tighten their belts, further contracting the economy. Unemployment rises, and a once thriving economy finds itself spiraling. Buffett, with his astute observations, has often pointed out these fragile interconnections. He understands that the fall of one domino can set off a cascade, leading to widespread repercussions. In the intricate web of global finance, recognizing these potential chain reactions is crucial, and when someone of Buffett's stature warns of such a sequence, it's a sign to sit up and take notice. The ramifications of Buffett's predictions are indeed profound and far-reaching. Beyond the towering skyscrapers of Wall Street and the bustling financial districts across major global cities, the tremors of his forecasts are felt in the most remote corners of the world. The intricate web of global finance means that a hiccup in one part of the world can lead to a full-blown cough in another. Emerging economies with their nascent financial systems and often volatile political landscapes stand on particularly shaky ground. The specter of capital flight looms large, threatening to destabilize already fragile economies. As foreign investments retract, these nations could see their currencies plummet, making essential imports like oil and food commodities exorbitantly expensive for the common man. On the other hand, developed nations, often seen as the bedrock of global economic stability, are not immune either. A recession in these countries can have a domino effect, leading to significant job losses, businesses shuttering, and a general atmosphere of uncertainty. The societal impact can't be understated, with potential protests, social unrest, and a rise in populist sentiments. Trade, the lifeblood of globalization, is also at risk. This could lead to shortages, inflation, and a general slowdown in global trade. Tourism, which many nations rely on as a significant source of revenue, is another casualty. With economic uncertainty, discretionary spending is one of the first things to be curtailed. This means fewer tourists, leading to job losses in the hospitality sector and reduced revenues for countries dependent on tourism. The interconnectedness of today's world, while a boon in times of prosperity, becomes a bane in times of economic distress. Localized economic shocks, be it a banking crisis in one country or a real estate bubble in another, can quickly spiral into global crises. Buffett's warnings highlight this very vulnerability of our interconnected world. International cooperation and coordinated policy measures become the need of the hour. Only through collective action and preemptive measures can the world hope to mitigate the cascading effects of a global economic downturn and chart a path to recovery. In the face of looming economic shadows, preparation becomes the linchpin of survival. Buffett, ever the pragmatist, emphasizes the importance of financial fortitude. For individuals, this means diversifying investments, reducing debts, and building emergency funds. For businesses, it's about streamlining operations, bolstering cash reserves, and reevaluating expansion plans. History has shown that those who anticipate and adapt to economic shifts fare better than those caught unawares. Buffett's clarion call is not just a warning, but also a guide on how to navigate the turbulent waters ahead. By adopting a proactive approach, individuals, businesses, and nations can not only shield themselves from the worst impacts, but also position themselves to capitalize on the eventual recovery. Amidst the gloom that Buffett's predictions cast, there emerges a glimmer of hope. Economic downturns, while challenging, also pave the way for innovation, resilience, and growth. Historically, such periods have birthed groundbreaking companies, fostered new technologies, and reshaped industries. Reduced valuations may present investment opportunities for the discerning. Entrepreneurs might find niches that thrive in adversity, and societies can come together, fostering unity and collaboration. Buffett himself, a stalwart of value investing, often sees such times as moments to invest wisely, banking on the inherent strength of quality assets. While the storm clouds gather, it's essential to remember that they also bring the promise of rejuvenating rains. In the cyclical nature of economies, after every downturn there's an upswing, and therein lies the silver lining, the potential for a brighter, more robust economic future. Buffett's insights serve as both a warning and a guidepost. During these uncertain times, staying informed is paramount. For continued updates and expert analyses on this evolving situation, ensure you're subscribed to our channel.